Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Will Nasgovitz, CEO and Portfolio Manager with Heartland Advisors, to discuss how value investors are responding to market volatility. Will, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
Let's start with discussing the factors that are largely driving the volatility that stocks have seen to kick off 2022.
Well, it's a good question. I think just the uncertainty in the marketplace, uncertainty around the Fed, how many rate hikes we're going to have this year, uncertainty around inflation, which obviously ties into the Fed. And we might have goods-related deflation this year, but how sticky, how persistent, how elevated will service inflation be? And I think the real question is, what's the underlying demand in the economy today? We've had a fair amount of stimulus over the last couple of years associated with COVID. So I think the market's just grappling what's the organic demand environment. You sprinkle in a little geopolitical uncertainty, whether it's in Europe or Asia, or maybe even here domestically. I guess it's no wonder that we've had such a volatile start to the year.
Are there things that are amplifying the impact of the uncertainty?
That's a good question. I think the market's waking up to the reality that both the physical and monetary tailwinds we have are dissipating. You layer in the elevated degrees of valuation and leverage in the system, and I think that's just amplifying this volatility.
And do you think that the uncertainty is having such a big impact now for those reasons? Because we knew this was going to happen at some point.
Right. I think that's a good question. I think we've kicked off fourth quarter earnings season here. Something like a third of the S&P is reported. And I think the market's recognizing or maybe disappointed with some of these things that we thought were transitory. Maybe a quarter ago, 6 months ago, a year ago, we thought we'd work through these bottlenecks in the supply chain, wouldn't have these continued part shortages. Maybe labor wouldn't be as much of an issue, but the reality is that they're more persistent. So I think that's why now this volatility has just been more elevated.
Do you think we're headed for a recession at any point?
Boy, that's not our lane. We'll let the economists make that forecast. But I think as investors, you got to marry and be aware, that managing that micro with the macro. From a macro perspective, what do we know? That typically when the Fed starts to raise rates, the yield curve a year out is flatter. That would suggest slower growth or maybe that recession. At Heartland, we're going to remain focused on populating our portfolios that we think have discounted that slowdown or discounted a lot of that uncertainty by utilizing our 10 principles of value investing such that the risk reward is favorable for our clients.
So as a value investor, how are you responding to the volatility here?
Yeah, that's a good point or a good question. I think this might sound a little counterintuitive, but we're leaning into companies that did not benefit from COVID last year. And we touched on the supply chain, we touched on labor and part shortages, et cetera. I think if you look in the healthcare space, a lot of companies were challenged from a top line or revenue standpoint because elective procedures, for instance, were delayed or deferred because of COVID-related protocols at their facilities. We don't think those procedures can be delayed indefinitely. So we're focused on companies that should benefit from those procedures. A good example would be Orthofix Medical, ticker OFIX. It's a $600 million market cap company in the med tech space based in Texas. They're a leader in bone growth stimulation. They have a budding spine and extremities franchise. EV to sales or enterprise value to sales is 1.2 times. Broader small cap med tech is north of 3 times. They're in a net cash position. They're EBITDA positive and growing. That's a rarity in the broader healthcare space within small cap. And what's really important here is that the interests of management and shareholders are aligned. We saw the CEO and at least one other officer buy stock in late last year. So we think Orthofix is a good place to be for our clients in 2022.
And Will, to wrap up here, what advice do you have for investors who are trying to navigate this market?
Well, it's hard to do this, but just don't get caught up in the day-to-day noise. This volatility probably is going to persist this year. So to help with that, I'd focus on valuation. That downside risk is just as important, maybe more important than the upside potential. Focus on quality companies that are going to be able to generate free cash flow in this uncertain, trying backdrop of an economic capital market perspective. And last but not least, balance sheets are going to matter here in 2022. They have not mattered very much in the last year or so. We suspect they will in 2022.
All right, Will, so getting back to investing 101, getting back to the basics. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.